welcome to Financial Independence Through Small Multifamily Investing. My name is Lawrence Laddie, also known as Mr. International. Tonight we have a special guest, Clive Davis, straight from the ATL. I'm in the Bronx, New York. I'm an investor here. I have 6 units in the Bronx, but I'm also looking to scale my business this year. I'm looking at areas of Norfolk, Virginia, the Piedmont Triad area, and also Huntsville, Alabama. We meet here every Tuesday at 7:30. If you need any help, please don't forget to always put the name and stuff in chat. We're here to help each other. We're definitely here to help each other to grow. So our special guest tonight is Clive Davis from ATL, Hotlanta, right? Clive has been investing in real estate since 1997, right? And not just down south, he's been investing in New York City, right? And then lately, he's closed just this year alone, he's closed on 300 plus units in less than 3 months, right? That's fantastic. Right? That's awesome, right? But tonight, Clive's going to talk about investing in multifamily and why it's not a sprint, right? It's a marathon. It's a long game. It's not the short game. It's a long game, right? So Clive, I wanted to say thank you for coming on. Thank you for taking time from your family. Appreciate you. Tell us a little about yourself, right? And how you started your humble beginnings, right? Please go ahead.
Sure. So good evening, everyone. I'm going to kind of go back to 1997. So that's when I emerged from law school, graduated from law school, and got started working professionally. And I started out as a corporate transactional lawyer working for a Wall Street firm, servicing Wall Street firms and by extension their clients. So that was kind of my first professional role that I started out with. And I'm going to rewind a little bit before I started, because two ways of looking at it. So my very first investment in real estate, in a piece of real estate that I was not residing in, took place in 1999. But the property that I resided in 1997 when I graduated from law school has turned out to be one of my biggest, best real estate investments. And I'll share the story behind that. So in my last year of law school, I had some remaining loan eligibility that was going to go unused. And so I figured, let me be creative and put this money to work for me. And so I took that remaining loan eligibility and I acquired, right out of law school in New York City, I acquired a co-op apartment that I own until this day. And so the co-op apartment, it's in Long Island City, New York. So for those of you who are in New York, you kind of have an idea as to where it's located, but it's on the waterfront directly across from the United Nations. Now, back in 1997, there had been discussions about developing that waterfront going back to the 80s and even late 70s, and it had just never happened through many administrations. So when that first building went up, I still have the New York Times article. There was a New York Times article talking about these pioneer, folks who came to this desolate area of New York City and decided to, plant roots and make that location of Hunters Point, Long Island City, their home. And so that building has 522 apartments. I was the 15th unit of that building. So we moved in September of 97. And there were still floors that were undergoing kind of completion of the build out when we moved in. So at the time my idea was, I'm in one of the, if not the most expensive city in New York. I just got out of school. How cool would it be for me to own a piece of New York, own the residence that I live in right out the gate? And so I was able to accomplish that. And again, for those of you who know New York City, if you were to go to that same location now, that entire waterfront is lined with luxury, high-rise residential homes and units. And additionally, you probably are aware that there was a point in time when Amazon was going to locate its HQ2 headquarters in Long Island City. Well, their location was next door to the building that I invested in 1997 as my home. So short story, that didn't work out for lots of reasons we don't need to get into. But I moved out of that apartment in, I think, 2000, 2001, and I've held it as a rental ever since. And that's something that, you know, my children know that they will inherit, but they are not allowed to sell, and that will remain in the family. So depending on how you look at it, that was my first real estate investment and continues to be held as an investment property. Fast forward to 1999, that was my first real estate investment where I was not residing in the property, and that was a duplex down in Cape Coral, Florida. So I'm in New York City, I'm working at a law firm, demanding job, demanding career, all of that good stuff. And I decided, let me go buy a duplex in Cape Coral, Florida. So some of you may be saying, well, where is Cape Coral? And why would you buy a duplex in Cape Coral, Florida? So my parents had retired in 1996 to Cape Coral, Florida. And so that's the connection there. It's Southwest Florida. If you've ever flown into Fort Myers, it's adjacent to Cape Coral. So Southwest, probably 2 hours north west of Miami. So they retired there. And so my background, my family is Jamaican. And so in what I grew up with is with the understanding that our children are the retirement plan. And so they don't necessarily, and they didn't necessarily have kind of, you know, rich retirement plans, and they hadn't necessarily been stowing away money over the years with the intention that they were going to need to live off that. So the idea is that the children that they have given a launch pad will, you know, look back and ensure that, you know, they have what they need. So my way of doing that was to buy the duplex investment property. And I opened up a checking account. I put my parents' name in it, and I had the rents going into that account. And basically, you know, at the time I was blessed to be well compensated. So I was never reliant on the income coming from the rental. And so I basically just told my parents, you know, you don't need to ask me for anything. You got this account here, just do what you need to do. And so that was my way of subsidizing them, you know, right at the outset of their retirement. And I ended up holding that property for 19 years. I sold that in 2018. So by definition, a very long-term hold. But what's interesting about that property is that that was instrumental in kind of providing a bridge for me when I left corporate life. And so I'm bouncing around, but it'll come full circle. So I acquired that. I self-managed it from New York. I have always self-managed my properties, even before the internet was as advanced as it is today, and you can kind of get anything or find anything that you need. I was self-managing it from New York City, demanding job, all of that stuff. And, you know, I had my folks there. So if I needed an electrician or a plumber or whatever, I could, you know, kind of work through them to find someone. So I skipped single family. I never was enticed to invest in single families. I went, you know, again, started with the duplex and held that throughout pretty much the entirety of my corporate life. So I started really with small multifamily. So I in 2016, so I'm fast forwarding to tell you about this marathon real estate journey. After a 20-year career, so I started out, as I mentioned, as a corporate transactional lawyer on Wall Street. I left that life and moved to work for Pfizer, which is in the news for all the right reasons these days. But I joined Pfizer as a lawyer, and Pfizer actually relocated me to Atlanta in 2005 to be the attorney for their Southeast business. I then went on to join another company, a Belgian pharmaceutical company, and I became a chief compliance officer. So all throughout this time, I had real estate investments. And when I finally left in 2016, after deciding 20 years was enough, I had this interest and passion in real estate. I'd always flirted with the idea of being an entrepreneur, so I wanted to kind of marry those. And I decided at the end of 2016 that it was time, if not now, when. And so, starting in 2017, what I started to do was the legacy retirement plans that I had with Pfizer, with my former employer after that, I moved all of those funds out of the stock market, and I moved all of those funds into a self-directed IRA. At the time, I had, throughout most of my corporate life, I had no idea what a self-directed IRA was. I didn't understand or know about it or learn about it until I left corporate life. And so basically, I started aggressively investing in commercial real estate as a passive. And so that led me to investments in California, Texas, DC, Florida, Georgia for sure, as well as New York. And so I got up to having invested in probably about plus or minus 2,000 units, mostly existing multifamily. And, but in addition, I invested in some ground up development of multifamily. So in San Francisco, a micro unit development in San Francisco, a ground up development, 300 plus units in Austin, Texas, office to multifamily development in DC, conversion development in DC. And then additionally, I invested in a hotel portfolio here in Atlanta. So in Buckhead, Perimeter, Alpharetta, for those of you that have any familiarity with Atlanta. And so I did all of that as a passive. But beyond kind of the return on investment that I was looking for, it was also part of my educational journey. So when I left corporate life, I set out on what I describe as a self-directed real estate MBA. And so I said, I'm not going back to school, that's for sure. I'd had enough school, but I embarked on this journey of just educating myself about, bigger multifamily. So, how do you do it? How do they structure these deals? What does the capital stack look like? What does investor relations look like? And so I started investing in deals. Most of them were deals where you had to be an accredited investor. And so I was investing with retirement funds and putting that with sophisticated sponsors for the most part. But again, beyond kind of the return on my investment, I was looking for what can I learn that I can then put to use when I step into the shoes of being a sponsor, because I knew, okay, I'm done with kind of smaller multifamily. When I first stepped away from corporate life, I went and bought a 5-unit. And I did that because frankly, once you leave that W-2 behind, it's easier to go buy a commercial property than it is to go buy a single family home. It's even easier than trying to refinance your personal residence. And you're probably aware that there's a difference in the financing and how they kind of assess commercial versus residential. If it's 5 units or and above, it's commercial. And so they're therefore looking at it more so as a business and assessing what is the revenue that the commercial property or the commercial business is generating. And then they look at you secondarily. And I see Will nodding his head because this is old news for him. Whereas if it's 1 to 4 units, it's residential and they are looking at you primarily. So the first question that you're going to get if you're trying to acquire a 1 to 4 unit is 2 years tax returns, and we want pay stubs. W-2, we want your pay stubs. And if you say to them, I don't have a W-2, I don't have a 9 to 5, I don't have pay stubs, that does not compute for them. And they try and stick you, if you're a peg, they try and stick you in a square or vice versa. And so for me, it turned out that it was going to be much easier for me to pursue commercial properties. And I did that 5-unit really as I think I was a few months away from having left corporate life. And I did that as a proof of concept. Yeah, I flirted with real estate. Do I really want to do it? Do I want to deal with tenants? And again, I'm self-managing. So I'm here in Atlanta. The 5-unit that I bought was also in Cape Coral, and it gave me the opportunity to spend some more time with my family, my parents specifically. And so, I had to find the property, tour properties. When I eventually landed that property, I had to gut renovate a unit. I had to evict a hoarder, all of the joys of being a landlord. So I acquired that in April of 2017, and I sold that property 2 weeks into COVID having hit. So it was actually the last day of March 2020, and we sold that property and did really well. But I did that as a proof of concept. And very quickly, I made the determination that that was going to be the last small multifamily acquisition or deal that I was involved in, and I wanted to go bigger. And that's what I was preparing myself to do. And so in my journey, I tell folks my story now. The first large deal that I did, I was awarded back in the summer of 21. But to tonight's theme of this being a marathon and not a sprint, I first put my first LOI that I submitted on a large scale multifamily was for a 92 unit, and I submitted that in April of 2019. And it took me until the summer of 21 before I was awarded my first deal. So longer than 2 years. And so, again, when you look at, my posts and other people's posts, you kind of see the surface, but you don't necessarily see all of the work that's happening to lead up to that breakthrough. And those of you that are familiar with the law of the first deal, Michael Blanc and others talk about this law of the first deal. That 0 to 1 is probably the hardest deal that you will ever do. Once you do that first deal, now you are credible in the eyes of brokers, because until you can say that you've done a deal, they'll nod their heads, but really they're just like, okay, how long is this going to take? When am I going to be able to extricate myself from this conversation or this exchange or whatever? Because I got real buyers. I got people who have demonstrated that they can close. And so until you get that first deal done, you are just a tire kicker in their eyes. I don't care, how sweet they are and how nicely they talk to you. But when you're talking about large scale multifamily, they're not going to take you seriously until you get that first deal done. There are tricks and things that you can do to break in with them and establish a relationship and establish credibility. And one of the things that you can do is borrow, leverage others' credibility, surround yourself with that or associate yourself with that. And so when you're having those conversations with brokers, I would talk about what my team, what my partners had done, as opposed to what I had done by myself. And so even though I could tell them, I'm invested in 2,000 units, again, what I had done passively was of little relevance to them, because they're like, okay, so you somehow invested in these deals, but that doesn't mean that you can be a general partner and can take down a deal and close on it. And so, you've got to convince them that, you're worth being taken seriously. That first deal that I closed, 244 units, $30 million acquisition. We raised $8.25 million. And we acquired that deal here in Atlanta, south of the airport, probably less than 15 minutes from the world's busiest airport in Clayton County. And the very week that we closed on that first deal, we were awarded a second deal. Now, the second deal that we were awarded, obviously we had been working on it for some time, but suffice to say that, and I was telling someone today at an IMN event, had we not taken down that first deal, I don't know that we would have gotten the second deal. Now, the second deal is a Cushman deal, 200 units, 1994 property, Class B, $40 million acquisition. And so, as you probably are aware, when a seller is working with a broker and you get down to, let's say that there's a best and final group, one of the questions that the seller is going to turn to their broker and say is, who are these people? Who is this Clive Davis? Who is Park Royal Capital? Can they close? What have they done? And so we were fortunate in that when that conversation unfolded, that they were able to say, we being Cushman and Wakefield, we've not done any business with him, but he just closed a deal in that very same submarket, happens to be four miles away. It was a $30 million deal. Plus, I had been developing a relationship with that broker for more than 2 years, probably 2.5 to 3 years. I'd been knocking on that broker's door, trying to develop rapport, trying to establish credibility. So it's a marathon, not a sprint. The deal that we got in November, the deal that we closed in February, those came as a result of investments that were made over 2 to 3 years that started to pay off and bear fruit. But you might only look at the flower and not necessarily look at all of the watering and the seeds and the soil preparation and all of those things that were done to get to that point. And so, I definitely tell people that, if you're looking for, overnight success, or if you think that you're just going to decide that you want to be in large scale multifamily in 3 months, you should be there, or 6 months, you should be there. Had I stopped at any point before I got awarded that first deal, let's say I just said, you know what, I've been doing this for 18 months. I don't have anything to show for it. You can find yourself in a position where you're like, man, I was making 6 figures. I had a good salary. Even today, I tell people that at any point, the reason that I felt comfortable kind of venturing out of my comfort zone and going out on a limb was because I knew worst case scenario, my backup plan was I can always go get a 6-figure job. So that was my safety net. Whereas other people from a mindset standpoint, they're in a job and they're thinking to themselves, I can't leave this good job. That would be precarious, that would be too risky. And so for them, they'll stay in that 9-to-5 job because it's safe, it's their comfort zone. And I'm looking at that scenario and I'm saying, how risky it is to have all of your income coming from one source that could be great today, and tomorrow you could go in and they could say, Mr. International, you've been a great employee of ours for the last X number of years, but we no longer have a need for your role, or we no longer have a need for you, and your role is gone. So what was a good, well-paying job, one day, tomorrow, it could be something else. So I'm always talking to people about, look, if you're trying to create generational wealth, which is something that I've been advocating for and speaking on in a number of different fora, you cannot rely on one source of income, especially a W-2 that could be great today and gone tomorrow, especially in the reality of this world. And so for me, again, just approaching it differently from a mindset standpoint to say that's risky. And I'd much rather be doing something that, can potentially pay off and be more lucrative in terms of the legacy and the generational wealth that I'm trying to create. Because as I'm commonly telling people, I don't care how highly compensated you are, you cannot pass on a high income to your children. No way, it just doesn't happen. But what you can pass on are appreciating assets or cash flowing assets that, whether you get out of bed or not, they're generating cash, they're generating revenue, they're appreciating in value. you know, in inflationary times, especially. So those are the things that, you know, were going through my head as I'm making this journey. And, you know, 12 months in and 18 months in and still, you know, nothing tangible yet to show for it. But it's only when you get that breakthrough that you realize that, okay, all of the work that I was putting in is now bearing fruit. So, Larry, I'm gonna stop there and let you kind of direct me, or you know, I'll let you run the show.
Okay, well, thank you. Thank you, first of all, for that was a great story you had there, because it shows that this is not a sprint, it's definitely a marathon, because you started in 97. The marathon is not to sell it next week. You got to hold on to it, right? To get some appreciation out of it, right? You started in, you said 18 to 19 into the multifamily, and you said just 18 months, nothing happening, but you still persevered. A lot of times we hear that people don't want to persevere, they give up. The vein is right there and they stop right before the vein, right?
Absolutely, and just you triggered me to say something. So one of the things that enabled me to keep going, because we're talking, you know, small multifamily too, and kind of the journey. One of the things that enabled me to keep going. So when I stepped away from corporate life and I went from high income, well compensated, to zero income, and I joke with people that for the first time when I walked away from corporate life, for the first time since the age of 18, when I headed off to college, I was seeing more money exiting or leaving my house on a monthly basis than was coming into my house. And so that's part of the discomfort that you experience when you decide, okay, I'm going to take a step back in order to take a much bigger leap forward. And that's exactly what I did. But what helped sustain me at different points in that window before that breakthrough was that I did have, you know, the small multifamily. I had the 2-unit, I had the 5-unit, I had the apartment in New York. And so in 2018, I was able to sell the duplex, and then I was sitting on, you know, some equity as a result of that. I was sitting on some sale proceeds. So that gave me some oxygen to sustain me, you know, while I continued the hunt, while I continued the journey. And as I mentioned, at the end of the first quarter in 2020, I was able to sell the 5-unit. And so now I had proceeds that I was able to bite into a little bit, but also set aside in anticipation of, I'm going to need some cash for that first deal that's coming any minute now. And so the small multifamily really sustained me. So, you know, the cash flow was you know, not anything that I could live off, but, you know, when you make that kind of a transition, any cash flow is very much appreciated and put to use, good use. But really, the cash proceeds from the sales really helped sustain me. And then it was it's what seeded me and enabled me to put skin in the game into the first deal. Because as a sponsor, I don't care what you hear, your investors are going to want to see you have skin in the game. And so there is no, I'm going to go do large multifamily deals with other people's money, but none of my own. You know, I find that to be, you know, somewhat suspect when I hear people teaching that in any form or fashion, and that was not my reality. And any deal that I'm doing, it's a deal that I believe in. If I'm going to take it to friends and family, it's got to be something that I believe in, and therefore I would be, you know, what would I be thinking if my own money wasn't in the deal? So small multifamily played a role for me, despite the fact that I've kind of moved beyond that and I've set my sights on larger scale multifamily. So now I'm looking at, you know, plus or minus 200 units. I think the $30 million deal that I did in November will turn out to be the smallest deal that I will do. And I'm now looking at $60 and $70 million deals. And so that's an evolution from a duplex to, you know, a much bigger scale.
Definitely. So quick question. You talked about mindset, right? What does mindset have to do with multifamily?
everything. So, and it's not just multifamily, but that's what we're talking about. So
Right.
first of all, it's the, most of us drive by large scale multifamily communities, depending on where you live, drive by large scale multifamily communities on a daily basis. Most of us have no idea or expectation that we could own that large multifamily community that we're driving by, because most of our socialization and teachings don't leave us thinking that, yeah, I can do that. We're thinking that that's for everyone else but me, or that's for some institution, or whoever owns that, they must be mega rich people. But that's not something that I could do. So I gotta stay small. And so a duplex seems within reach of most people. If you have a real estate mindset, a duplex doesn't seem out of reach. A 5-unit doesn't seem out of reach. A 10-unit, maybe you're thinking, yeah, if I came together with a few friends, I could, so that seems within the realm of possible. So, if your mindset has been shaped that, that's for rich folks or that's for other folks, but, I can't do that, then you're not even going to look, in the upper unit counts, and you're going to stay and you're going to be focused in on, 2 units, 5 units. And one of the limited mind beliefs that I had for many years was that whatever I was going to do, I had to do it with my own money. So even when I left corporate life, and I went and got the 5-unit, in determining what I was going to look for, I basically said, okay, I'm going to need to come up with 20 to 25% down. And then if I need to put any money into the units, I'm going to need money for that. And so I did that calculation, and I said, okay, I can only buy an apartment community up to this dollar threshold, whatever that was at the time. I don't know, 500,000 or thereabouts. And so if you continue in that mindset that you can only accomplish what your personal bank account will allow you to accomplish, you will never kind of grow beyond, smaller multifamily, things that are touchable or within reach, And so the first thing you got to do is disabuse yourself of that mindset and say, there's nothing that is beyond my reach. The question, the better question always is, how do I accomplish that? Not can I accomplish that, but how can I accomplish that? And if you recognize that when you're talking about large scale multifamily communities, it's a team sport. So it's, what's the team that I can put together? What team can I join, or what team can I surround myself with? And so that's the way, when you start thinking with that mindset, that you can start going after larger properties, and it has nothing to do with what you have in the bank. People that are very wealthy, they're not thinking about what do I have in my savings to determine what types of investments they're going to pursue. That they don't allow this personal savings account to be a limiting factor in terms of what they can get involved with.
So Nicole has a question. Thank you. Nicole says, what size of deal does the law of the first deal apply?
So I know Michael Blanc talks about, he talks about the law of the first deal applies to a duplex. So, if you believe, at least his version of it, if you go out, you start out and you go buy a duplex, and however long that takes you, you decide you want to go get a triplex or a fourplex or whatever beyond that first deal, it applies there. And that second deal and third deal should come quicker and more easily than however long it took you or however difficult it was to acquire the duplex. Now, I had a substantial gap in time between me getting that duplex back in 1999, because again, I didn't consider myself a professional real estate investor at that time. That was more of a, yeah, let me get this. set up the checking account, put the parents on it. Good, they're taken care of. But when I considered myself becoming a professional real estate investor, that didn't happen until 2017 when I left corporate life. And now I flipped the script and it's all about, okay, I'm pushing my retirement chips into commercial real estate. And I'm preparing myself to become a full-time sponsor of large-scale transactions. And so, as it applied to me, law of the first deal, I shared with you kind of how that unfolded for me. So after 2 years of knocking, closed one deal, same week, deal number 2. So as a matter of fact, so the funny story is, so I was in Dallas at a multifamily event, a conference, and I had a buyer interview. So I was best and final. Then I got invited. I think it was us and 2 other groups were invited to the best and final interview. And for those of you who haven't been through that, that's basically where the seller is saying, okay, these are my finalists. I'm going to interview them, or we're going to interview them, and we're going to determine who's going to be the lucky person that we're going to sell this deal to. And so I went upstairs to my hotel room and we did the buyer interview via Zoom, just like we're doing tonight. And, ultimately, we put our best foot forward. They called us back and said, congratulations, you've been awarded the deal. So I fly back to Atlanta, and on Monday, I get a call from a Berkadia broker. Now, the deal that we were awarded was not handled by Berkadia, but the Berkadia broker says to me, hey, Clive, congratulations. I hear you were recently awarded Reserve at 2070. And I'm like, how did you hear that? That just happened on Friday. Today's Monday, and it's not even a Berkadia deal. And suffice to say, it's a small world. And news travels very quickly. So I think he'd found out through his financing guy, who was one of the finance people I had been talking to. However, he found out about it and he said, well, anyway, I've got 2 deals for you, Clive, that I think you might want to take a look at. We don't have an offering memorandum. We just have the BOV, the broker opinion of value. We were just awarded these deals. They're off market yet. Right now, if you sign this NDA, take a look at these 2 deals, see if they're good for you. One was neither of them turned out to be a fit, but this is a broker I'd been talking to and developing a relationship with for more than 2 years, had never received an off-market deal from him. And the Monday after I get awarded that first deal, he's sending me 2 off-market opportunities. So law of the first deal, that was my reality. And as I mentioned earlier, another deal that we had been working on with Cushman turned out to come real fast. So we close and then we get notified a few days later, oh yeah, you got awarded these 200 units in Stockbridge.
It's nice.
So hopefully that answered your question, Nicole.
Oh yeah, it did. It definitely did.
but that credibility piece, I mean, seriously, they will not take you seriously until you can say you've done something worth recognition. And you got to appreciate how many people they have in their inboxes, how many people are trying to take them out for lunch. They're very well compensated, so they really don't need anyone buying them lunch or coffee or tea or whatever. And they have a ton of people, especially now. Multifamily has been hot for probably more than a decade. And there's so much capital that is chasing multifamily deals that sellers are in the, who would have, you just don't experience this when you're going to buy a duplex or a 5. There is no best and final. There is no, let me interview the person who wants to buy my property and determine whether or not I want to sell it to them. It's just a different world. It's a different reality. So yeah, so that's the journey.
Thank you. Hold on, Desmond, go ahead, Desmond.
Oh, okay. Thank you again, Clive, for your story. Excellent sharing it with us. When you went about management in place, I know you was pursuing the 90 unit. and then you were awarded the 200 plus unit. Was it the same management? Did you keep it? What were some of the things you took into consideration in choosing that type of management to manage that asset, and I guess the type of renters you want to deal with?
Yeah, so the 92 unit was that very first LOI that I submitted. We did not get that deal. We were runners up. So I was like, so for me as a newbie, I'm thinking, okay, we didn't get this one. You know, we'll get the next one in a month or two. And fast forward, it was more than 2 years before my LOI was finally accepted and the deal awarded to us. But the good thing, again, it's a marathon, not a sprint. So what was I doing with my time for that 2+ year period? So I was developing relationships with property managers, insurance brokers, tax consultants, obviously brokers. But I developed a relationship with a property management company because the first thing, you know, after having managed all of my properties that I had, small stuff that I had owned myself, my education says that large scale multifamily, you don't self-manage. You turn that over to a professional property management company, and then your role is to asset manage the deal and oversee the third-party property manager who's handling the day-to-days. So one of the things that I was able to do when I was chasing properties and submitting LOIs is develop relationships with different property management companies. Some were referred to me, and one in particular stood out because for that 2-year period, I don't know how many LOIs I submitted. I don't know how many properties I toured. But one of the things that I would do to try and establish credibility in the eyes of brokers is, rather than me showing up for a tour by myself with no properties in the market, with no deals that I was a general partner on, no deals that I was a sponsor on, I talked earlier about kind of associating yourself with credibility. So one property management company, and I'll say their name, Province Real Estate here in Atlanta. They manage about 7,000 units. They also are now managing some properties in DFW and some other Sunbelt markets. But I established a relationship with the principal, so the founder of the company. And it got to a point where I would say, hey, Art, I am touring this property with Cushman next Wednesday. Would you be able to join me and tour the property together? And probably 60–70% of the time he'd say, let me check my schedule, let me check my calendar. Oh yeah, I can make it. And he would be at the property. Many times he would be at the property before me, and he'd be chopping it up with the broker. He's known within the community, and then I'd show up. And so now he's part of my team. So he's not on my payroll, but I'm treating him like, yeah, this is my property manager. He's part of my team. And so he has credibility. And so much different scenario than I show up and I'm introducing myself. They don't know me. I don't know anything in the market. So I established that relationship with him. So when we finally got awarded our deal, it was a no-brainer that they were going to get awarded our business. And so I'm of the opinion that they got the first deal in November, then we got the other deal that we closed in February. So again, with deal number 2, unless you give me reason not to continue feeding you business, you won't get my business. So they are managing the second property, and they'll manage the third and subsequent properties that we acquire here and other places too.
Thank you.
So, Clive?
Yes.
Alicia Milton asked a question. How did you go about setting up your systems to self-manage? How did you go about setting up systems to self-manage when you first start out, right? And the second part of the question is, she has commercial property management experience, but she has never managed residential assets. Is there any different outside the emotional aspect of it for the tenants?
Okay, so I'll take the first one.
Okay.
Yeah, so the first part, just repeat the first part for me.
I'll tell you what, Alicia, you here.
Yeah, don't be shy.
I know, right? Well, I didn't want to forget my question. So, and I know that we've talked before, but I've had some other opportunities come up since then. So I was asking, What type of systems did you use initially to start self-managing? Because it's not something that I want to do long term, but I have a reasoning behind it because I want to grow that portion of the business for a certain stream of income to manage our assets.
Yeah.
But I've even thought about acquiring a property management company, but until I can do that, I want to self-manage. So how did you do that starting out?
So it's much easier to self-manage today than it was in 1999 when I got that duplex. There's so much available. So, and I tell people, so I could have been paying 8 to 10% to a property management company. And in my mind, for the most part, if you have a property that's in good shape, that you've invested some money into, you've renovated units, the biggest thing that they're going to be doing is collecting your money. And in this day and age, you don't even need to meet a tenant to collect their rent. There's so many ways that you can do that. So one system is just, how am I going to collect rent? How are they going to pay me rent? I have a tenant in the Long Island City apartment. I've never met her. I get her rent checks usually early, like clockwork, and I've never met her. I'm trying to think if we've ever spoken on I don't even think we've ever spoken on the phone. So the systems that are there today weren't necessarily there, or at least I wasn't aware of them in 1999. And I said earlier that I was not a serious real estate investor, so I wasn't really investing the time to develop systems back then. It was kind of like, as long as the rent is showing up, that's the primary thing. When I got the 5 unit in fast forward to 2017, now we're talking about there being more things available within reach via the internet. So, if I needed a handyman, I could have 3 different plumbers or handyman or electricians bidding on anything that I needed to be done. And all of that you can do via the internet. And there are so many different places on the internet that you can go to bid out the work that you need. If a tenant says that the toilet is continuously running, I can figure out what's going to be the trip fee, what's going to be the cost. I can do all of that right from the laptop or desktop that I'm on. And so it's much easier to self-manage today. I would say that systems and processes wasn't my strong suit. And I think when you start becoming more professional and you decide, okay, I'm doing this as a business as opposed to a hobby, that's when it's critical for you to have those systems and processes in place. And when you get to large scale multifamily, I wouldn't even think or contemplate managing myself. And that's where I rely on my property management company to have sophisticated systems and processes in place. And then, I have certain KPIs or key performance indicators that I'm looking at, and they should be able to generate certain reports. And, they've got all of that because that's what they do. But to be honest with you, Alicia, my systems and processes were, I would say, immature. And, I would think there are probably others here that can speak to some better systems and processes than I got to implement. Then there was a second part to your question about, I think it was around transition. You've been in commercial real estate, but not necessarily on the residential side. Maybe I don't know if you've done office, retail, or what you've done. But I would say that the skill set that you've developed in your commercial, I think you said 24 or maybe even 27 years, the skill set that you've developed is transferable. And so in any scenario, you're dealing with people. This is a people business. And so whether you're talking office, whether you're talking retail, whether you're talking multifamily, residential, it's a people business. So I would say the skill set that you've developed and honed over those years is transferable into the multifamily residential side. And so you should be presenting yourself with confidence whether you've ever done, you know, and you've done at least one deal, and I think you've got others that are pending. But you know, for someone who's in your situation and they've done commercial, but they haven't necessarily been on the residential side of the house, again, it's a transferable skill set. And at the end of the day, it's a people business. And so if you've got people relation skills, that's going to be transferable to anything that you do within the CRE space.
Thank you.
Thank you. Thank you. Great question. Great questions. Anybody else? We have time for one more question. Anybody has a question?
Oh, I talk that much? Oh, wow.
Question. I'll take it.
Yeah, Lee, take the question.
Hey, Clive, thank you for sharing your story. Living my journey through yours actually right now, because I'm here in Northern Virginia and trying to build out that relationship with the property managers and the brokers as well, because it's really like you had mentioned, it's how do you leverage that borrowed network, and that story that you have with that property manager who you showed up with, and you basically got his credibility just by showing up. And my question for you.
Yes, I have the following question. So I'm not surprised given.
Hello.
Go ahead, Lee. Go ahead.
My question for you is, are you going to continue to focus on acquisitions, or are you going to try to vertically integrate your organization to do different things and diversify the income stream?
Yeah, so at this point in time, I don't have any interest in vertically integrating. My plan for 2022 is to do 4 deals. We closed one for the first quarter, so 4 deals is basically doing it at a cadence of 1 per quarter. And so that's my 2022 goal and objective. I don't have any passion for management of large-scale multifamily, and so that's not a direction that I'm moving in. The more likely direction that I will move in is to diversify into development. And so I am currently in several development related deals, and just got into a 142 unit development here in Atlanta that hasn't broken ground yet, but that's the more likely path for me. I'm kind of enamored with the idea of developing from the ground up. So that is not a matter of if, it's just a matter of when.
Awesome. Could I just piggyback on that, Laddie? One of the things that you mentioned was, and I had to come to this realization myself, was that multifamily and larger commercial real estate is a team sport. So I guess you evolved into that same scenario, but once you did realize that it was a team sport, did you focus on building out your team, or was it a faster path for you to become a part of someone else's team? Could you expand on that just a little bit?
Yeah, so Trevor will, this will resonate with Trevor, because I think, Trevor, you're also in the Sumrock group, if I'm not mistaken.
I am not, no.
Okay, for some reason I thought you were. So
I hang around a lot.
So for me, one of the things that I did as part of that self-directed real estate MBA that I mentioned, I said, how can I shorten the timeline? So for me, I'm a big believer that if something might take you 3 years to do, if you're kind of just stumbling around and trying to figure it out on your own, trial and error and what have you, a mentor should slash that time. So I got with a mentor with the idea that if it would take me 3 years, getting with a mentor, it should take me 12 months or less. And so I became a part of a apartment mentoring program. And that enabled me to immediately parachute into a scenario where I'm surrounded by people who believe in multifamily investment, who are invested in multifamily. And that's a way to immediately join a community versus kind of just trying to figure it out on your own. So mentorship was a key component for me. And to the 2 deals that I did in November and February, each of my partners is from that community.
Got it.
And so So those are the people that I was, again, what was I doing during the 2 years of submitting LOIs? I was developing relationships with people, figuring out who do I have similar values with? Who do I share kind of a risk tolerance with? Because I tell people, whoever you choose to partner with, it's a 3 to 5 year marriage. And you don't want to be in bed with someone and realize that you don't communicate the same, you don't have the same love language, nothing is aligned, because that's friction. And when you're escaping from corporate life, the last thing that you want to do is jump out of the frying pan into the, you know how that goes.
Yeah, thank you for sharing your story.
Thank you very much for thank you everybody for these amazing questions. Clive, I want to thank you very much for coming on tonight. Taking time
Thanks
out
for having me.
Family. Thank you for sharing your story and sharing that this is not a sprint. This is definitely a marathon.